Hi, this is Lee Harris from Emoji Trading, and in this video I'm going to present some updates which we've introduced in release 2.12 of our Emoji Trading order flow suite. At the time of this recording, it's the start of 2018, and over the past couple of months there's been quite some interest around the new indicator from Mike Valtos of www.orderflows.com, which Mike calls Valtos SR levels. And there's also been interest in the webinar that Market Delta held on their new Edge Zones or Easy Zones. We've implemented these new Valtos SR levels, and having studied the Edge Zones in detail, what we've identified is that they're a variation of the massive imbalance indicator that's been contained within the Emoji Trading order flow suite ever since our first release. But in our release 2.12, we've considered how both of these indicators work, and we've taken the opportunity to develop the way in which we mark supply and demand zones in Sierra chart to make them even more powerful, but we'll come to that later in this video. First of all, let's go through the new Valtos SR indicator. This new indicator is absorption based. For an explanation on absorption, please check out video number 4 in our order flow video series. In summary, absorption occurs when passive buyers or sellers, in other words, traders that have limit orders working to buy the bid or to sell the offer, get these orders filled by the aggressive traders who buy or sell at market. In other words, the aggressive traders hit the bid with their sales, or they lift the offer and they buy at the asking price. If there's enough passive volume to absorb all of the aggressive or initiative buying or selling, then we have absorption. The Valtos SR indicator looks at the volume levels at the extremes of bars and considers it in relation to the total volume that transacted within the bar. You can think of this as seeing whether a candle had an above average level of trading at the opposite ends to its final direction, or in other words, the buying at the bottom of an up bar or the selling at the top of a down bar was sufficient to cause a reversal in the direction of price. This is similar in concept to the existing emoji absorption at extreme and POC at extreme indicators, but this indicator considers the overall amount of volume at the bar extreme relative to the volume in the total bar, and it adds some user-definable filters to consider whether the bar is at a recent price extreme and whether price action is contrary to delta, buying or selling pressure. Valtos SR levels will signal with any combination that you like of a symbol, extension lines, and a forward projection zone. We also have a new zone visualization functionality which we'll explain later on in this video. The reason why this indicator can work well is that we're highlighting areas at price extremes where strong buying or selling comes into the market, so it's a real-time, market-generated support or resistance level that's likely to be defended when it's first revisited. If it's not defended or if it fails, there's a good possibility that it will change its role from support to resistance or vice versa. Here you can see some examples on some popular contracts, ES, CL, 30-year bond, 6E, which have occurred over the past few days. What you'll also see is that some of these examples are being presented on simple time-based candlestick charts, 1-minute charts and 5-minute charts. Many of the Valtos indicators are optimized for traders that don't want to understand the detail behind order flow, and they're simply looking for an indicator to use across many contracts using simple time-based candlestick charts. Towards the end of 2017, Market Delta held a webinar on their new feature called Edge Zones. We've looked at these very closely. They've been described by Anthony Drager as highlighting when trading speeds up. If you study the Market Delta documentation for this feature, very simply, it's highlighting when there is a bid or ask diagonal imbalance that's greater than a user-specified volume value and also greater than a certain percentage level. Our existing emoji massive imbalance indicator allows you to highlight when either of these conditions occur. So what you can consider is that an edge zone, or in our implementation, an edge level, highlights when both of these conditions occur. So the edge level highlights the price level where we have this variation of a massive imbalance, just like other emoji indicators highlight price levels where other situations relating to supply and demand occur. What caught attention from people during the Market Delta webinar were the red and green zones that were drawn out from these levels and also where they stopped. We did some research on this, and what we've assessed is that the Market Delta zones are drawn from the point the signal occurs until the point when a bar closes above or below the price level of the original signal. By way of comparison, our original emoji trading order flow suite has always offered zones drawn from a signal that can project forward over a fixed number of bars, and we've also offered extension lines that have drawn from a price level, and these extend until such time as price next trades at that level. What we've now considered is that there is an even more powerful visualization that can be achieved over and above the arbitrary situations of a fixed number of bars, a bar closing above or below the level, or price trading at the level. And we've introduced a brand new supply and demand visualization that takes order flow into account. This visualization is called an emoji zone, and we've implemented it across many of our order flow suite indicators with effect from version 2.12. You can learn more about emoji zones in our dedicated introduction video. Bye for now.